Good morning. Happy Wednesday. Welcome back to the Travel Esquire'd YouTube show. Today we are you are in for a treat. I've announced it last month, so now he's here. Attorney Soluto Uba. He is here to talk tax strategies for tax professionals. Um, this is what he does, y'all. And we are
Had to
unique.
make my grand entrance.
Yes. That's always the what we have to do is make the grand entrance. But he's here to help us with our tax strategies, help us plan for the next year, understand what we have in our arsenal that can help us with our taxes. So please make sure you ask any questions in the chat. We will get to them. I have some questions to start out with. Let me tell you,
Hmm.
he is fired up. He's ready to go. He's willing to share his knowledge. And, this is what he does. We met because we do a lot of similar things for our clients. And
Hmm.
I was impressed by his knowledge and his growth in the past year or so, and there's no way I couldn't have him here to help have provide strategies to you guys. Like, he's amazing. Sit back, grab your pen, your pencil, your iPad, your carrier pigeon, whatever you need to do,
Whatever you need.
because you're about to get some gems, and I want you to be prepared for this. So, Saludo, I don't know if you want to take a moment to introduce yourself, and then we'll
Yeah.
get right to it.
Yeah. Glenisa, thank you so much for that lovely introduction. Kind of like you said, my name is Soluto Uba. I am the founder of the Uba Law Group. We're a firm that helps 6 and 7 figure companies protect their business, their brand, and their bank. And when it comes to protecting the bank, a lot of that has to do with tax strategy. So really part of what I love to do, and I'll share a little bit about my story as kind of we go on. But I love to use the skills that I've learned as an attorney and in some other businesses and industries that I've started and help them transfer to different industries. Particularly when it comes to travel, there's so many things that you all do that can be utilized in the strategy. So I want to make sure that you don't necessarily have to add anything additional on, although there are lots of strategies that you can bring on that will save you thousands of dollars every year. But there's what I call hidden money that's trapped in your business right now that I want to help you guys unlock. That money is hidden, but you're paying it over to Uncle Sam, you're paying over to the IRS, you're paying to
Mm.
the government. As a business owner, you know every dollar counts. So I want you to take that money and put it back into your pocket. So that's what I want to share with and kind of help empower everybody to do that.
And also, that's just another way to leverage and grow your business, because now you have
Mm-hmm.
more money in your pocket, more money you can invest, the more clients you can
Mm-hmm.
attract, how you learn and scale your business.
Indeed.
So let's get to it. So you
Yeah.
and I have had conversations about how unique it is to be a travel professional and what we do, and then the intersectionality between different disciplines that travel professionals have. So let's start
Mm-hmm.
first of all looking at the business structure. A lot of us are LLCs. Some of
Mm-hmm.
us are solo companies, sole proprietors, not incorporated yet.
Mm-hmm.
So, what are some of the things that we should be looking at as smaller company looking to grow? What how can we leverage what we already have? Most of us have a
Yep.
laptop. Most of us have a cell phone, and that's about it. So how do we
Yeah.
how do we leverage that,
Yep.
and so we can scale and grow our business?
Yeah. So the beauty of the situation is, and here and now in the year 2022, really all you need is internet, a laptop, and a cell phone, and you'll probably be good. You'll be in a position to do a lot of the things that you're looking for. So when it comes to LLCs and structure, I always want to make sure I create that distinction. LLCs help you protect your legal. The tax strategy is what helps you protect your taxes. There's a little bit of overlap, and there's some intersection between the two, but it's always important to understand what you're doing with each one. When you set up an LLC, your main goal, it's kind of twofold. Your main goal is to, number one, legally protect your business and create a wall of protection in between yourself and the business. So in case anything, goes sideways, any legal action happens, any lawsuits, anything like that, your personal assets will not be on the hook. Your house, your account, your cars, your retirement, your investments, your money underneath the mattress, whatever. We don't want any of that being at risk. So you set up a LLC, which is a legal business entity, a limited liability company, and that creates a wall of protection in between yourself and the business. So that comes from the legal side. If you're sole proprietorship, you and the business are the same thing.
Hmm.
So if someone sues your business, if there's
They're
any type
suing
of
you.
legal action, if somebody comes after your business, they're coming after you. So you'll be personally on the hook for anything that happens. If you have a disgruntled employee, if something happens with whatever type of situation you're involved with, if they come after you and your sole proprietorship, you are personally at risk. Which is why one of the first things that we do when we have business owners come to us as clients and make sure that they actually have a legitimate business is we want to protect them. Because as a business owner, you're already taking an extraordinary amount of risk. There are lots of different things that could go wrong in the company. So we want to make sure that you're at least empowered to know that your assets will be protected so you can go 100 miles an hour and kill it and crush it in the business world. So that's the value of the LLC.
All right. So, um, that right there is just valuable in and of itself. So
Indeed.
now that we have our business structure, we have our, our line between what you what's call it, your personal assets, your business assets. Now, how do we keep that with our equipment? Because again, this thing right here, we
Mm-hmm.
get all, we're doing our travel thing. We're doing, we're talking to suppliers, talking to clients, and then
Yep.
grandma and mom calls, and you
Yep.
got to get the kids from daycare.
Yep.
So that right there shows a there's no separation between using this for personal and using this for your
Business.
business. So talk to us
Mm-hmm.
about that and how we can strategize tax wise with that.
Yeah. So one of the most incredible things about kind of tax law and tax strategy is that there's no way they could have ever predicted where technology will be and where it is right now. So a lot of the tax laws that are on the books were written during a time where things were a little bit more separate and distinguishable. But it's the year 2022. You hop on your cell phone, and a lot of us are producing content. We're on social media, we're marketing, we're email, doing all these sorts of things where we use our technology, our personal computers, our cell phones on a regular basis. And so when it comes to that cell phone, you're using it legitimately for your business, but the government knows that it's also used for personal. So there's a lot of back and forth where they're trying to figure out, okay, where does the personal begin and the business end, and how do you figure this out? So back in 2011, a pretty helpful IRS ruling came out that pretty much said that if your business uses a cell phone, if you're using a cell phone and it's not an extravagant cell phone and it's ordinary and customary for what people use a cell phone, a cellular device for, then you can write it off as long as you have a separate line that's distinguished from your business line. So what I tell clients to do all the time is go call up AT&T or Spectrum or Verizon or whatever your phone provider is, and just get a landline in your phone. Have them add $10 a month to your bill and plug a landline into your house and just have a separate landline, which is a separate line. You don't have to use the landline. You just need a separate phone number distinct from the primary business cell phone that you run. So after that, you can run off the entire cell phone bill. Additionally, you can also, if there's anybody in your house and your family that materially participates in your business and helps you, you can also write off their bill because they're business related devices. You can write off that one entire bill 100%. So one of the things that we teach is called the conversion principle. It's what we call it, and it's one of my favorite parts of tax strategy because it allows you to take what would have been personal expenses and convert them into legitimate business expenses by adding a legitimate business activity. And so this is the name of the game when it comes to tax strategy. This is the name of the game when it comes to taking your business and using it to write off your life. You want to take what you would have been doing anyway and see if there's a way to legitimately turn it into a business expense. And we do that by adding business activities. So that cell phone that you use for business, you use it to call your family, your mom, you use it to check on the kids, grandpa, work, all sorts of stuff. You're going to use it for your personal, but now we can turn that $200 cell phone bill every month into a $2,500 write-off at the end of the year. That puts money back into your pocket for doing what you are already going to do. And this is just one example. We do this in so many other areas and dimensions of your business. The same thing with this, with your laptop. I have some pretty nice audio and visual equipment. I have a nice little webcam. I've got microphone. These are things that I've used on a personal basis. However, they're acquired as business assets. They're acquired for me to grow and advance my business. One of the most helpful things that you'll see, and I'm not going to bog y'all too much talking about the IRC, the Internal Revenue Code, but one of the most helpful things that you'll realize is that kind of the litmus test for what is a deduction are things that are ordinary and necessary for running your business and running your company. And in the year 2022, all of these electronics are just standard. Even the most advanced phone, you can have an iPhone 13 Pro Max, whatever the latest phone is. And this is a standard piece of technology and equipment for everyday life. So if you're using it for your business, that's a write-off.
You have like totally blown my mind, and you've only been on for 5 minutes.
We got more.
Like, to know that just picking up my phone, and if my daughter helps me with my business, not only am I writing off my expense, I'm writing off
Yep.
her expense too.
Yep. Yep.
Wow.
Yep. And we can talk about kids in a little bit because kids are a cheat code to save big money. And if I can, Glenisa, I kind of want to. I love kind of teaching the practical strategies, but one of
Sure.
the things that I like to do the most for my clients is to make sure that they're not just 100% dependent on me. I want them to have a mindset to be able to think through this and plan through this, even when we're not discussing things. And
But
so
no, that
when
that's
it
very
comes,
important because,
yeah,
like I said, we're both attorneys, but you have your niche, I have mine, and
indeed,
I don't have anything to do with tax strategy. That is all you. So
yeah,
you're even
yeah,
teaching me as I utilize people in my business, whether they're contractors, subcontractors, my own
indeed,
child, because she helps me put
indeed.
together, when I do my travel, she helps me put
Oh yeah,
together the packages to give to my clients right before they
mm-hmm,
travel.
mm-hmm,
And to know, and I pay her,
mm-hmm.
and I know that that payment to her is a write off, but to know
Yep,
that now that I'm paying her for a service, and I may have to call her, can you go to Staples? Can you do this? Can you
yep,
do that?
yep,
Now I
yep,
can take
yep,
her cell phone as a write off too, because I pay for that.
yeah.
Mind blown.
And,
Game changer.
and so here's the beauty of that situation. And I'll get back to my original point, but I love that you brought up all the things that your daughter does in your business. Number one, you're teaching generational and transitional skills so that now that your child will see, okay, this is how business is done. This
Right.
is how you run a company. This is how you do the little pieces together. So she's getting that intrinsic knowledge. On top of that, a lot of business owners, a lot of us that are parents, I have two kids, two small children myself, but many of us make the mistake of earning our money, paying taxes on it, and then using that money to pay our kids or pay for camp or pay for this, that, or the third. What you want to do is you want to have your child work in your company and
Mm,
pay them as an expense of your business.
mm,
So then once again, this is the conversion principle. These are things that would have been personal expenses. We all got to, kids cost money. We got to do what we got to do to pay for them. But now they're going to be working in our business, and now we're going to turn that into a business write-off and a business expense, and we can pay our kids and be able to get a deduction at the same time. But here's where it gets better. Kids and hear me when I say this, kids are excellent tax shelters
mm.
because of the standard deduction that's applied to kids. There's a good chunk of money that we can pay our kids where they have to pay no taxes on it. So that's a double benefit. I get to pay my kid from my business legitimately because they're working in my business. And even now with technology kind of where it's at, You can have a teenager, 13, 14 year old running social media, doing
Yeah,
website design,
yeah.
doing TikTok, Instagram, all that stuff. And these are high paying jobs. People get paid tens of thousands of dollars to
Oh
do this.
yeah.
So you can legitimately pay your child a nice fee to do it and get that write off in your business. And then if it's beneath the threshold for your child, they don't have to pay any taxes on it.
Wow.
So now you've got a business write off yourself. I believe the limit for the standard deduction in the year 2022 is $12,955. So you can pay your child up to that amount of money every single year. That's a write off, a straight up deduction for your company because it's underneath the standard deduction.
Wow.
For the kid, they don't have to pay any taxes on it.
Wow.
No federal taxes, as well as payroll tax. They also don't have to pay payroll tax if you know how to do it right. And so now everyday life is being paid for from the things that you would have already done. Your child is learning about business. They're adding a valuable service. They're helping grow the brand. They're making your life easier and giving you the freedom that you need to expand your company. All the while, this is stuff that you would have been doing anyway. All the while, they're using their cell phone, which is also a write-off. All the while, they're increasing the exposure on social media. All these things that are
Wow.
necessary to grow in the company. So when we say, hey, these things stack on top of each other, this is how part of what life is supposed to be as a business owner. This is what we're talking about. And to kind of go back to the previous point, when when I say I want to kind of educate business owners on what this looks like, I don't want folks to think that, oh, am I doing kind of something sneaky? Typically when it comes to tax strategy, people use the word loophole a lot. Oh, this is a loophole, or this is
Mm-hmm.
real situation. A lot of things really aren't loopholes. They're actually the rules. And so the Internal Revenue Code, hundreds and hundreds of pages. When you look through it, the vast majority of the tax code is not, hey, you can't do this, you have to pay this much money if you do. The vast majority of the tax code are just incentives. If
Mm.
you're organized, if you're involved in this business, you can get this incentive. If you're involved in this industry, you can get that. If you're involved in this, they're just benefits for doing something. Because, and here's kind of the general breakdown for you to understand kind of the tax game. The government, they don't sell a product, they don't really have a service. So they depend on us as taxpayers, obviously, to fund the government.
Mm-hmm.
So when the government is trying to promote a certain type of activity, it puts a tax incentive behind it. It wants people to invest in real estate, so folks will have homes to live in, and families will have places to live. It
Right.
wants business owners to create businesses so we can service the community, so we can provide jobs, so we can fuel the economy. It wants all these things to happen. So as business owners, the government puts a lot of tax incentives behind that because
Right.
it wants to encourage us to do this. Because the reality of the situation is 8 out of 10 businesses will fail in their first 5 years. So
Yes.
it's a scary thing to become an entrepreneur. You could lose everything. You have to really take a lot of risk when you're doing this. So in order to encourage that risk, there are tax incentives behind that. If you want to see what the government is encouraging, follow the money, follow the taxes.
Mm-hmm.
And then also on the flip side, when the government wants to discourage something, it'll add additional taxes. That's why when companies kind of ship jobs overseas or they'll do
Yes.
something like, they have to pay higher taxes because the government wants to discourage that activity. So that's kind of the big picture that I want business owners to understand. These aren't loopholes. These aren't kind of sneaky things that you're doing on. No, this is intended to happen. They want to encourage this activity. You're providing a public service to the entire community, to your economy, to everything
Mm.
that you're doing. You're providing a service and a benefit to the economy and to the community. So the government wants to incentivize you to do that. So that's sorry. I'm soapbox. Step off the
So
soapbox
it's all
now.
good.
But
It's all good.
but I
We're
always want
learning
people to
here.
understand it's not shady. It's not a bug. It's the effect. It's the intended cause.
So with all of that, I have a question for you. And I think this is a good segue to this question.
Mm-hmm.
There are some questions in the chat. I'm going to get to them in a minute, but I want to make sure this question is answered because this has been a question within the travel agent interweb, so to speak.
Yeah.
And to get your thoughts on this, I think it's going to be nothing but invaluable.
Yeah.
So, being a travel agent, we vacation for a living. That's what we
Mm-hmm.
do. We're up, we're in different countries, whether we're at all inclusive resorts, we're traveling Europe. I have a friend who's
Yep.
doing a European cruise right now. I know people
Yep.
who have done, been to Japan when it was open, Maldives, all over the world,
Mm-hmm.
Bali,
It's
so on
fun,
and
but
so
it's
forth.
it's work.
Oh, no doubt. But we're there. We're not always. There may be a day or two where we're sitting by the pool, but even then, we're
Mm-hmm.
going live.
Mm-hmm.
we're blog posting, we're providing our feedback, doing
Mm-hmm.
giving pictures and photos and videos of the location, um, doing a vlog in a sense, maybe not in the traditional sense of going on Facebook, putting together our days and all that other stuff, but we're
Mm-hmm.
going live every day saying this is where we are, this is what we're doing, what we recommend, what we don't recommend. This is what we do.
Yep.
How do we take what can we do? Let me rephrase this question. I'm going to make it a little bit more broad and then I'm going to give
Yeah,
you the
I got you.
platform. So, what do we do? Because one of the things that a lot of people get dinged for is the IRS is like, you're writing off vacations. Prove to us that it wasn't just a family vacation. You
Mm-hmm.
know what I mean? Prove to
Mm-hmm.
us that, and this is the uniqueness of being a travel professional. It's not
Indeed.
just curating travel for others, but it's also getting our feet wet, getting knee deep into the products that we're selling. So how do we do that without having the IRS be like, we ain't feeling it?
Yeah. Legitimate question. And this is something that happens across industries. So one of the first things I want people to really think through is that success at a tax level, at a strategy level, is going to be a team effort. We have a resource called the Power Team Playbook, and it's built on the idea of the power team. There's you, the business owner, but then there's other experts that you need on your team and helping you so you can be where you want to be and your company can grow where it wants to grow to. There are people that have zones of geniuses that are separate from yours that you need to lean on. So powerful parts of your power team are obviously an attorney, of course, but then there's also an accountant. So when it comes to your accountant, and this is no shade at my accountants because I love my accountants. We work hand in hand with accountants all the time. But as a business owner, you're going to need to assess what type of accountant you have. So there's accountants that we call legacy accountants. Maybe people who have kind of been the accountant for the family, and we know Joe or Miss Susie or whomever that's been the accountant, but they don't necessarily have expertise when it comes to entrepreneurs. And then even accountants that work with entrepreneurs, maybe they only work used to working with smaller businesses who aren't doing six figures and growing to seven figures and whatnot. But the reality is, as your company grows and as you're making more and more money, the types and caliber of expenses that you will incur will grow. There are going to be situations where you're going to have travel and you're going to have different trips that would not have really worked as an expense when you were just starting up, that now become a legitimate expense that you can and should take. But if you don't have an accountant, if you don't have a professional that's used to that and has the courage that understands how to take it and isn't intimidated by kind of fears of people in the community or just kind of general ignorance, you're going to be at a disadvantage because you're going to feel very extremely self-conscious about taking that. Number one. Number two, one of the foundations of tax law and tax strategy, rather, when it comes to creating write-offs and creating deductions, is the idea of ordinary and necessary. Essentially, when it comes to
Mm.
deduction, you can take the IRC 162A. You can take deductions that are ordinary and necessary to your business. So here's where kind of the sticking point happens. As business owners, we have to start to create systems and structures that document what we're doing and to leave a paper trail. So this is one of the strongest points that I tell my clients, even when it comes to the LLC world, as well as the tax strategy world. You want to be able to leave documentation, recording, and evidence that you're doing the legitimate part of your business that you're claiming that you're doing. So when you're traveling for business, what does it look like to have a broken down itinerary? What does it look like to have an agenda? What does it look like to have all of your documentation, your emails, your correspondence with the different resorts, your correspondence with different people who you'll be coordinating with, meeting with, vendors, service providers, hotels, resorts, all this stuff. And what does it look like to create a package labeled May 2022 trip? We're going to Mexico and we're visiting three or four different resorts, and we're doing this and this and this and this. Because it's a whole different type of swagger that you walk in when you write off a month's worth of travel, but you can show this is the business stuff that we're doing. We had meetings at these days, those days, that days, with these people, those resorts. all of this is ordinary and necessary for my business. This is how I'm able to best serve my clients. This is how I'm able to best show them, hey, these are the new hottest resorts. This is what they have to offer. These are the extracurricular activities. This is what you can do in the city. All these things are legitimate, but you need to be able to document and explain it. You need to be able to have a paper trail. When you have a paper trail, then you can puff your chest out. Then you have confidence that all of these things are write-offs. I love tax season. I love at the beginning of the year when we're being able to apply for our stuff, but it becomes a little bit, it's a lot with the documentation. We have an organization system now that our COO has implemented that's very helpful. But a lot of times, and I'll say this, I'll try to stress this. A lot of times we miss out on money saving deductions, not because we didn't qualify, but because we weren't organized.
Mm.
A lot of times we miss out on key deductions, not because we don't qualify, but because we're not organized. So
You just
getting
said
your
a
stuff
word right
on point,
there.
creating a system, indeed,
You said a word
creating a
right there.
system that allows us to take full advantage of the things that we're entitled to and save big money while we're at it is key. That's paramount, and that's one thing that I think is greatly lacking in so many different industries, not just travel. Trust me, we serve clients across the board, and everybody is generally unorganized, and that's one thing we got to work on.
Wow. You just said a word. So, what I'm hearing, just to recap, the
Mm-hmm.
expense needs to be ordinary and necessary. And you said that a couple of
Indeed,
times during the stream.
indeed,
So, that right there is your theme. Is it ordinary? And I think your test is it ordinary and necessary part of your business, right?
indeed,
So, just giving some example, if all you do is sell Europe and you go on vacation to family to Mexico, you're going to have to prove that Mexico vacation is ordinary and necessary because it's outside of what you
indeed.
generally sell.
And you can do that. You don't necessarily have to be intimidated. One strategy to do that would be to start send email correspondences. Are you touching bases with resorts in Mexico?
Right.
Are you reaching out to those different agencies and show, hey, we typically do Europe, but we're starting to expand and offer more services.
There you go.
And so we need to do this and this and this and this to expand our services. And that's entirely legitimate.
Hmm.
It's ordinary and necessary for businesses to expand their offerings.
Right.
And so you don't have to be intimidated by it, but you got to show your work. You got to provide that paper trail.
Right. So when we talk to our BDMs, scheduling a site visit, taking our photos, how about even coming back and blogging about it? Because that part of
Mm-hmm.
the documentation.
Indeed, and it's in the beauty of the internet, the beauty of YouTube, social media is we'll be documenting so much of what we do. Somebody wants to ask a question. Oh, I have a YouTube video from 6 months ago right here where I talked about this entire experience. Ain't nothing more documented than someone
Right.
seeing you on site breaking down the different aspects of a location. Like it's right there. That's why I say I don't think the tax code can even fathom what the internet would give us. So
Right.
we have a lot of this at our fingertips with our phone. With your very phone, you can do so much of this.
Right. Right.
Hmm.
That right there is just like I said, you just giving us life. So I'm gonna go to a
Yeah,
couple of questions on here,
wonderful. Let's
and I
let's go.
still have some questions too. But all right, come on, there we go. Now, Miss Rhonda, I love Miss Rhonda. We've been on a couple of conferences together, and I look
Hmm.
forward to going on more. So she's asking, going back to your telephone question, she uses Google
Hmm.
Voice for her business on her cell phone. Can she still conduct her cell phone bill?
Yeah, so that's a very good question. If you see me looking to the side, I like to write notes when people are asking questions so I can be very specific with the response. So when it comes to the idea of writing off the cell phone, they're looking for a separate landline, a separate distinguishable line. And currently, voice over IP and Google Voice or something like that does
Mm,
not suffice for that separate line. That still doesn't mean that you have to have your cell phone be a 100% personal use. You can still there are accountants and there's methods of doing it where you can kind of still give a percentage, either 50-50 business, 70-30, whatnot. But my recommendation to really make all this easier is just to add a little $10 landline or whatever it is, because it allows you to get a full deduction of that other part. And like we discussed previously, this is for yourself and everybody that's actually participating in the business. So here in our company, my wife also helps with our business. So our cell phone bill is about $200 a month, and that's in a year $2,400 just like that. And we just
Mm,
need to add a little extra landline, $10 extra a month. You pay $120 extra to get a $2,500 deduction.
mm.
I'll take it every single time.
Yeah, that's math. So here's a question. I'm gonna expand a little bit on that.
Mm-hmm.
So on my cell phone, and a lot of the cell phones nowadays allow you to have more than one line.
Mm-hmm.
And what I've done is I have my personal line, and then I get an additional SIM card for my travel business line.
Yep.
How does that work?
That's an excellent strategy. So um, when we say a landline in your house is fine. But if you have another separate line that's distinguished from your personal phone, that will work as well. So lots of times, people in their cell phone plans will have an iPad or something that has a cellular device. Even my watch has the ability to have its own separate cellular line.
Yep.
One of the other things that you could use is which I think is probably the most effective, particularly for the travel industry, is having a mobile hotspot. So you always have internet on the go. That will come with its own line as well. So if you have a mobile hotspot, then that's a device with its own line already providing another business benefit. And
Mm,
now you can run off the whole cell phone with that as well.
nice,
So there's lots of different
nice.
ways to customize it. And these aren't like extra superfluous things that you're not going to be using. You can turn all of these things into legit business functions and helpful for your actual business use. So lots of different ways to maximize.
See, you
Miss Ron, turn that line on back on. Turn it back on. Tell them you changed your mind. You need it back.
did it.
Call them
Right,
right away.
right. You thought you was saving an
Indeed.
expense, but nah, you didn't. Nah, get that landline
Indeed.
turned back on.
Indeed. That's a really good question.
Yep. And so we have Natasha. And first of all, she says this is good. I agree. And I think good is just an understatement. I think this is
Yeah.
amazing. Um,
Thank you, Natasha.
yep. But she's asking, we don't want to end up like Wesley.
I saw that. Indeed.
So
It,
she's
that,
asking,
that that brings a good point.
what is the difference between what you do and what a CPA does?
Excellent. So, Natasha, really good question. I'm going to answer. I'm going to answer your question first, and then you also raise another point that I want to emphasize. So, so I'm a tax strategist. I call myself a tax strategist because what we focus on is working with individual businesses. We have consultations that we do with companies, and we look at the full gamut of what they do. So, as a business owner, what's great is kind of like I talked about before. You can combine aspects of your personal life and also create deductions and big time savings and incorporate that with things that you also do in your business. So as a strategist, I'm pulling out specific strategies based on tax law that you can implement, whether it be travel savings, whether it be cell phone write-off, whether it be writing off your vehicle, writing off your kids, S corp, all these different things to save money. So that's the tax strategist part. Business owners are notorious for having thousands of dollars. We have high four figures and we have five-figure savings for
Mm.
clients. We had two husband and wife teams that we did a tax consultation for last week, and both of them, I'm not going to go into the amount that they're saving, but it's pretty ridiculous.
Mm.
And so that's what a tax strategist is. So that's the services that we offer. We know CPAs are invaluable. We partner with accountants all the time because the accountant is actually the one who's going to be doing your taxes. You're going to take your tax strategy that we come up with, and then you're going to take the game plan that we give you and go to your accountant so you
Mm.
can actually implement it throughout the year. A lot of people think tax planning happens in February and March, and May was the tax deadline, and they think, oh, that's all the tax planning. That's wrong. Tax planning happens throughout the year. Come October, that's when you really want to start to kick things into gear, because if you have an implemented tax plan, you've seen what you've been doing throughout all the different quarters, and you have a pretty good roadmap of where you're going to be. So November, December, Octoberish, I love to nerd out at that time because I understand where my business is, and it's like playing chess. We start to manipulate different things. Oh, we want to have an extra write-off. We can do these things to add additional deductions. Oh, we want to keep more money in the business. We'll hold off and we'll shift those deductions into January, February of next. All of this stuff doesn't need to be intimidating at all. We have a slogan at our firm: you don't have to fear the numbers. You don't need to be intimidated by your taxes. You don't need to be intimidated by those aspects of your business, because as a business owner, you can have a lot of control in how that works. So that's the first thing. Tax strategists, we develop strategies and pull them out of your business so you can take that hidden money and put it back into your pocket. CPA, they do the actual accounting part, and they actually implement it, and they're the people that you're working through with your tax plan on a yearly basis. So that's the first part. The second part is, you mentioned Wesley Snipes, and so what's it's a sad situation. He got hit for tax evasion, but what I want to distinguish is there's tax evasion and there's tax avoidance.
Mm,
Tax evasion and there's tax avoidance. One of them is legal, one of them is very not legal.
right.
So tax evasion is what's illegal. Tax evasion is when you have, hey, this is how much you owe in taxes, and you don't pay it, you try to run away from it, you try to scam the system. That's tax evasion, illegal. Tax avoidance is very legal. You want to avoid as many taxes as possible. And so when you think about the word avoid, it doesn't mean like run away from it, it means to negate that tax.
Got
So
it.
a simple example, if you make $100,000 and you have $10,000 worth of deductions, you have just avoided $10,000 worth of taxable income by using those deductions. That's what we mean by tax avoidance. So all these strategies that we're doing, we're trying to negate as many taxes as possible. We're trying to decrease your taxable income, and that's how we put more money into your pocket. There are court cases, there are federal judges, the Supreme Court judges that have ruled and specifically said no citizen is under any obligation to pay more taxes than they're entitled to.
Mm,
So when I talk about the educational piece, there's that stigma about taxes, like, oh, you got to find the loopholes because just no. These are things that you're entitled to do as business owners. It's in the law. It's cemented in the tax code. You're not doing anything sketchy. These are your rights. And honestly, there's some people that argue it's your responsibility as a citizen to make sure that you're paying properly what you should be paying in taxes and not overpaying. I don't know about y'all, but I'm not trying to pay anybody additional money
yeah, that
that
right
more than I
there.
have to. I mean,
Me
and so
neither.
my last point is I work with a lot of business owners who have moved out of startup mode and they're really starting to hit their stride. They hit their first six-figure year in the past couple of years. They're starting to move towards 200K, quarter million, $500,000. Some people are moving into seven figures. And one of the things that I see a lot is there's a space in your business where you're no longer a startup. You're not a small business, but you've gotten too big to be a small business, but you're still kind of too small to be a big business.
Mm,
And what a lot of people don't realize is you need to transition as a business owner, and I call it moving into CEO mode. You need to start to be a vision caster. You need to start to see the big picture. You need to start to strategize and put plans into place to really move you towards where you dreamed about your company being. In order to do that, though, you have to fire yourself from a lot of the small, menial, day-to-day tasks in your business that are time sucks.
mm,
They're necessary, they're important, but they're a time suck and they just drain you. So at a certain point, ideally, you don't need to be the one to respond to all your emails. You don't need to be the one taking all the phone calls. You don't need to be the ones taking all the low level necessary tasks. But how do we do that so we can shift into CEO mode? You need to find money. You need to bring people onto your team. You need to utilize team members or maybe utilize technology. And so the hardest part is, how do we do that if we don't have any money? That's where the tax strategy comes into play,
mm,
because this is extra money. This is 5, 10, 15, 25, $30,000 plus in many cases that you can bring on and you can utilize to bring on team members that make your job easier. So now you have the bandwidth to be the CEO and to take the company to where you envisioned it being. So the reason why I love taxes is not because, oh, taxes are so great, but because as an entrepreneurial lawyer, I see how it frees up the people to be the business owners
mm.
that they want to be and to turn their company into what they want to do. So ultimately, they can have more time to enjoy life and to do the things that they like to do. They want to be with their family. They want to hang out with their friends. They want to travel. They want to serve in their church. They want to be working in the community. But you have to develop a system. You have to create a structure that will empower you to do that. And that's where the tax strategies become so helpful on a real world, day to day life level. So it's not just taxes that I'm excited about just for tax sake. This has real implications, and this actually empowers you as a business owner to be everything that you want to be.
Wow. I get it that. So Ms.
Yeah.
Rhonda came back with another question. And she's asking, she just turned her business line off last month. Can she still claim it on her 2021 taxes?
So my first disclaimer as an attorney, you want to meet with your tax professional about that. You want to touch base with your accountant. But generally, yes. If it was an expense that you had for 2021, and you're using that, then you'll be able to take the company deductions. Now, I don't know your personal situation. Unless you've extended your taxes, you probably have to do an amended tax return, and then you start to need to get into logistics. What's it going to cost to amend? What are the numbers there? Is the money that I'm saving from taking this strategy going to be? Is it going to equal out with the with the money that's going to cost? And so that's why you have those people on your power team. You have that accountant to break that down for you. But just to answer the question, yeah, you can go back and you can amend if you need to modify something when it comes to your taxes. It's
So
a good
I'm
question.
gonna go into there's some more questions out there, but I want to just go back to something that you said. Now you said as a tax strategist, you and your team partner with the CPA for the business in order to implement that tax strategy that you develop for this small business
Hmm.
as they continue to grow. Now,
Hmm.
a lot of people, having an accountant is not something that they're used to doing. They don't know what questions to ask, who to look
Hmm.
for. And then, for me, I want somebody who's going to understand my industry. How do we look for, find, and pick an accountant who's not afraid they look at the vacation. They look at, oh, you spent a week in Mexico, and then turned around next month and spent a week in St. Bart's, and then turned around
That's
next
what we
month
do.
and do right and did a month in Europe,
Yeah.
and they're not afraid or intimidated of that. How do you want somebody? To me, I want somebody who's not afraid of taking risks but
Mhm.
understands that. How do you find someone who's able to partner with your agency, understand how you're going to bring that tax strategy forward,
Yeah.
and work with you to do that for that business?
Excellent question. So the first thing I want to talk about in general, you don't want a scary accountant. You don't want an accountant that's scared. You don't want an accountant that's intimidated to take the deductions that you should be taking. So there's three types of accountant that's out there that I would say. There's the extremely conservative, scared accountants. They'll just kind of take the basic, vanilla, generic deductions, and then you'll most likely be leaving a lot of money on the table. We're talking thousands of dollars every
Mm.
single year that you'll be paying extra that you don't have to. That's a very conservative, scared accountant. Not the type of person you want if you're a business owner, particularly if your business is growing. Now, the other type of account, the second type of account, is the extremely loosey goosey, throwing stuff at the wall that shouldn't be happening type of account, taking deductions and trying to use tax strategies that you have no business using, that's not applicable to your company that you don't qualify for. There's some folks out there, it ain't their money, and so it doesn't even make sense because it's not going to lead to a long-term business. But there's some people who'll do that. You want to be in the middle. There's a third type of accountant that's conservatively aggressive. They understand the law. They understand that the law is typically adapting and changing. In many instances, there'll be gray areas, and so they're not scared of the gray area. They understand it, and they're willing to step into the gray area, but they have a defensible case. So don't be afraid to move into areas that are new, but know that hey, these are the reasons why we're moving into it. This is the reason why it's defensible. This is our paperwork. We have an actual strategy that we're moving forward with here. So that's the first thing. Now the question is, how do we find these type of people? So there's really two or three ways I like to recommend. The first is the most effective and the easiest one. Word of mouth. Getting a referral or recommendation for somebody in your industry, in your same state, in your area. So even for our law firm, we've had to we've had the benefit of not having to try so many different accountants because when we first broke into the game, we've had attorneys that were further along said, "Hey, this is my person. This is who I vouch for. This is a recommendation I have." And then from there, we're able to develop other relationships and meet more and more competent CPAs and accountants. So if you can find a referral from someone in your industry who's has the type of success that you're looking to have, that's golden because they've already vetted the person for you, and they're the type of person that's working and doing the type of work and working with the type of caliber of business that you're seeking to be. So that's kind of the easiest way. Second way is we have the internet. There are a lot of groups online through social media, other types of business interest groups, other types of travel groups where people come together. And these are some of the questions that you can ask, that you should be asking to find the types of experts and accountants and professionals and power team members that you need.
Mm.
So, personal word of mouth referral. Second, groups, online groups. Excellent resource. And then third, if you're kind of, cold calling it, it's a blind date with an accountant, the types of questions that you want to be thinking through and asking are, what is the income of your typical client? How much money does your typical clientele make? What type of deductions do you typically recommend for clients? Do you have a specialized way of looking at and evaluating different businesses? Have you been audited? Are you afraid of an audit? How do you document and make sure that with the plans that you're referring to and the strategies that you're suggesting, you're comfortable with them? All these different things to gauge their comfort level. Because number one, if they're an accountant that's been in the game long enough, they're going to see an audit or two, and it doesn't bother them. It doesn't phase them at all because they understand these are things that happen in the industry. But if they don't have a history of talking through advanced strategies or talking about, hey, with our businesses that are doing this, we know that this is where they should be with their businesses as they grow into the next echelon and tier of revenue and money. This is what we start to do with them. If they don't sound comfortable, if they don't sound well versed, if they're kind of thrown off by your questions, that's an indication that this might not be the person for you. So there's all different ways of doing it. But if you can get that personal referral, get it. But if not, there are lots of different groups where folks have done this and they've spilt their own blood. So you don't necessarily have to do that yourself.
I like that. Spilt their own blood. So
Indeed.
Mona has a question. She's saying she
Mhm.
doesn't like to go live when she's in destination. A lot of people do that, safety reasons.
Mhm.
And so she waits until she gets home and shares her photos and videos. Is this an okay method as far as documentation to the IRS?
Yeah. So that is an okay method, particularly for excellent question, Mona. Particularly for as part of your package. So when we talk about building a paper trail, obviously before you go to a site, before you go to a resort, there's a lot of work, there's a lot of correspondence, communication, all sorts of things that you're going to use to plan. Document everything. Create a system where you have particular folders and particular information with folks, your contacts at the different resorts, your contacts with different agencies, all that stuff. And then when you're on site, you're going to have the actual videos and photos and all the video evidence that you're going to have. When you get back home, you have your Dropbox or your Google Drive or whatever. In that same folder that we're talking about, you're going to be storing this automatically. That's going to be something that's part of your system. And then afterwards, that's your package, that's your file where you detailed everything that came along with that trip, and boom, that's your evidence right there. So all of that needs to be packaged, and everything that's relevant to it would go there. Now, there are some benefits of going live on location. First of all, it's a social media age. Everybody likes to see people at nice, wonderful, exotic locations. But additionally, there are other ways to kind of collaborate with other business owners, other travel agents, other people in different fields, where we're going live and having an additional element that's contemporaneous, that's when you're actually on site, can open you up to more strategies. But what you said is not wrong. Whether you're recording it live, you're documenting it as it happens, or you're documenting it and then showing it later, you were still there. You were doing the work. You were taking care of business, and you have the evidence. So, like we said, the most important part is just making sure that we're organized and we have a system to document and to back this up. So we want to make sure that we take advantage of everything that we're entitled to, whether that you do it live or you save the recording after the fact. Excellent
Awesome.
question.
So Natasha has another question. And first of all, she said, "Thank you for breaking that all the way down. And any tips for those of us starting out or took a huge hit with COVID that affected our business, in which we use a lot of our personal assets or funds to cover our business assets and
Yeah.
expenses?"
Yes. So this is a really really big question, a really important question because there's so many different ways that things get hit there. Obviously, COVID took a huge hit to many industries, particularly travel, because folks were shut down for a bit. So there are a few ways that we can get it, depending on if you used any of the COVID funding or any of the COVID bills, PPP, EIDL loans, and different things like that. There are specific benefits and specific strategies that you can use for that. Obviously, PPP, if you took those loans and you had the documentation proof of your business, those are entirely free, forgivable. But what a lot of people don't know about is what's called the ERTC, the employee retention tax credit, or the employee retention credit, depending on who you're talking to. So this is for companies that have W-2 employees or have people on staff that they were still paying during the pandemic. Depending on the time period, you can get 50% of what you pay them during a quarter, or up to 70% of what you pay them during a quarter, up to a particular limit. $10,000 is the limit. And you can get that as a refundable tax credit. So if you have taxes, that ERTC will pay for it, and the amount that's left over is refundable, meaning by that they cut you a check and they send it back to you. But there's specific parameters for you to apply for the ERTC. But it's an invaluable tool. There are also other laws that are put into place where if you got sick with COVID, or if you had a family member, or if you had a child that got sick with COVID,
Mm.
or if you had a doctor's referral for you to stay home during COVID, there are other strategies and there are other laws from that time period. We're mostly talking 2020 and 2021 that will actually would have paid you to not work, because it's an extended part of the CARES Act, the COVID tax bill, and then the extension, the 2021 update to that tax bill. So what I would do is I would reach out to your accountant and see, hey, this is our business structure in 2020 and 2021. Are we entitled to any of these things? Are we entitled to the ERC? Do we qualify for that? And so that's one powerful strategy, because you have the statute of limitations is 3 years. You have an
Mm.
additional 3 years from when you qualified for these credits to go and claim them. And so the time for doing them anew is done. But if you qualified for it during the applicable period, you can still get it. So that would be the first thing I would say when it comes to COVID. The second thing that I would say is, depending on how you funded your business, there's just two main ways for you to put money into your company. It's either going to be a contribution, an owner contribution, or it will be a loan. An owner contribution is not considered. That's considered just you investing into your own business. That's not going to be money that you pay back, or you get a deduction for paying off. On the contrary, you can make a loan to your business. A loan is something that you will be entitled to pay back. So if if your business is starting to do better again and you're making the income back and you set it up as a loan, then that money that you pay back won't be credited as new contributions that you're making yourself. It'll be taxed differently. You're not going to be taxed on a loan that you pay off. And so it's very important to be talking with your CPA. How are you structuring this money that you put into your business? Is it structured as just as a contribution? Is it just money to just help your business get off the ground? Or is it structured as a loan in order to help you temporarily, but with the understanding that it will be paid back? Very,
Awesome.
very good questions.
Awesome. So I have a question for you, and it is
Oh,
that
yeah.
daunting home office expense. And so,
Mm-hmm.
I'm privileged enough that I actually have a dedicated room in my home. That is my office. I do my law work
Mm-hmm.
here, I do my travel agency here. I think I spend more time in this room than any place else in my house.
Right,
You know what I
right.
mean? But some people, I have some clients who live in New York City, and their home office is a corner in their apartment, or even in other places they just may not have the room,
Mm-hmm.
to be able to have dedicated expense. And there's just a lot of questions around what you can deduct when it comes to
Mm-hmm.
that expense. So can you enlighten us a little bit about what that
Yeah.
expense is, what that means, and what happens if you don't have a traditional home office?
Yeah. So that's an excellent question, because the home office deduction is a very powerful strategy and a tool that we teach our clients to utilize. And so essentially what it allows you to do is to take your home office and there's two methods of doing it. One is the more common method, and you take whatever the percentage of your home is that you have for your home office, and you take you can you're able to deduct that amount from different home expenses. So, for example, if you live in Texas, where I'm at, and you have a 2,000 square foot home, and your office is 200 square feet, that's 10%. 200 is 10% of the total square footage of your office. Therefore, you can deduct 10% of different expenses: the electricity, the gas,
Mm.
the water, internet. In many instances, can be a 100% business deduction. You want to go ahead and do that. And so, I, but then those are kind of the main ones that people know about. But in addition to that, if you have any home repairs that you have to do, you can also deduct that. So a lot of people aren't thinking through that: home repairs and home maintenance. If you have somebody who comes by a cleaning service and they clean the house, also a part that you can deduct. If you had to, if you have a house and you had to replace the roof, or if you had a plumbing issue like we had in our old house, they had to dig up the entire front lawn because our plumbing line snapped, and so
Oof.
that was a pretty penny. But we're also able to deduct a portion of that. And the big idea is, because your office is located in your home, these are all expenses that are incorporated into you doing business, and you have a functioning office, so you can write those off. Now, for my folks that don't have a lot of space to work with, well, my go-to strategy is to, hey, get creative. The real key for your home office is that it has to be the regular and exclusive use for your business. So no matter what dimension of space that is, make it regular and exclusive. I had a client who literally cleared out a closet, small closet. They shut the door. They had put a little desk in there, a little child's school desk, and that's where they did their office and whatever. And because they're in a state with a smaller apartment size, even though it's a smaller space, it's still the percentage of your home, your apartment, your living space, whatever. So you can still take advantage and get that write off. So it's just about being creative and making sure that you're utilizing the deduction, because the light bill, the gas bill, the water bill, all that stuff adds up over the course of the year. And that's another way to easily get thousands and thousands of dollars in deductions for, once again, things that you are already going to use anyway. Conversion
Wow.
principle. What would have been a personal
Wow.
expense is now a business expense because you have a legitimate business activity.
Wow. That wow. And I'll be
I love
honest,
it.
I personally used it. I had to get my front steps fixed. I'm now
Yep.
dealing with you're dealing where we got to dig up a pipe because we got a clog somewhere and
It's
we
the
don't know
worst.
where. Ugh. And I have my house was redone, but
Mm-hmm.
the pipes going into my house are still that old 100-year
Mm-hmm.
cast iron that's starting to leak and
Switch
you
that
don't
stuff
know
out.
where.
Plumbers love to see that.
Oh yeah. And so, I'm
Yeah.
looking at an expense there as well. So
Oh,
yeah.
one caveat I'd like to make is, when you're taking those expenses for the home office deduction, you have to distinguish between home repair and home maintenance versus home renovation.
Mm.
So if you have to redo the pipes and the plumbing, home repair, home maintenance. If you put in granite or quartz countertops and you redo the bathroom, that does not count.
Wait,
That
I'm
is
going to
not
ask you
repair.
a
Those are
question. I'm going to
renovations.
ask you a
Indeed.
question because
Indeed.
so I have 4 bedrooms in my home. And
Mm-hmm.
so I have a townhome, so everything's up and down.
Mm-hmm.
So I took one of my bedrooms and made it into my office. I put down new floors. I painted, installed a huge TV that I use as a
Yep.
monitor, put in new light fixtures, new curtains, the whole shebang.
Yep.
Can I deduct all of that?
All of it is a deduction, because all
Nice.
of those things you can easily defense. Hey, we were setting up our area. In some instances, some folks will have their home office, will have a portion of it function as a little mini studio. You're going to need that big screen. You're going to need we got to redo the floors. This is the year 2022. This is why I keep on saying the tax code could not fathom the internet. And the aesthetic matters. You're going to need your space to look a particular type of way if you're
Right.
looking to attract certain type of clientele. You're going live on a regular basis. You're going to need to have certain type of things built in. You might need to have different sound and audio rewired in particular. All of that stuff is incorporated into your office, and it can be ordinary and necessary for you to function. And so it's all a write-off.
Nice.
and it helps on a personal level too. Sometimes you just want to get away from everybody and just go into the office and have a nice little place to be at. So you get
Right.
to enjoy it at both levels. Indeed.
No, that's good to know because, like I said, I
Mm-hmm.
totally redid this office last year, and
Mm-hmm.
I had an idea that I could write it off, so on and so forth. So knowing that for sure is definitely positive for me. So we have hit our hour. Um,
Man,
let
oh
people
man,
know how they can
already.
find you.
Indeed, indeed. So uh, once again, if you guys are just hopping in here, let me reintroduce myself on the back end. My name is Soluto Uba. I'm the founder of the Uba Law Group. As you can tell, I like tax strategy a little bit,
Just
and I
tad.
love to talk about it and to train business owners about it. So one of the ways that you can find us is on social media on Uba Law Group. It's UBA Law Group. And so we teach about business ownership, intellectual property, tax strategy, of course. And actually, we have a tax savings masterclass coming up. So
Oh,
there's two main ways that we work with clients when it comes to tax strategy and tax savings. We have one-on-one consultations where we have a tax strategy VIP day, and we have a full breakdown for your business, and we produce a customized tax game plan. But we're also really maybe once, maybe twice a year. We'll see how it goes. We have a general masterclass where we teach all of these same strategies, but with a little bit more accessible when it comes to price and a little bit less customization. So
so
we're
how can
actually
they
going to
get on
have a
that waiting
tax.
list for that?
Ooh, that is a good point. Can I? Oh, I think I can type here in the
You
guest
can
chat.
put it right in the
But
comments.
if you go into our website ubalawgroup.com/TSM for tax savings masterclass, and I just threw it right there in the comments, and I'll throw it
Yes.
in the chat as well. If you go to ubalawgroup.com/TSM, that stands for tax savings masterclass, you'll be able to sign up for the list. We actually have limited capacity. There's only 10 seats
Nice.
available total. And so once they're filled, they're filled. And so this event is actually happening next Wednesday, April 27th at 1 p.m. Central. So we break down our top 15 strategies for business owners, and we'll throw a couple bonus strategies in there, and teach you how to save money on taxes every single year. And really, that's the part that I really love about this. That every single year, because as your business grows, the type of strategies you'll be able to use will also grow. And so if you liked any of the things that you heard, if you know that hey, we need this right now in our company, we're transitioning to that next level, and we gotta shed some of our bad habits and learn how to grow as a company. Sign up for the tax savings masterclass. If you want a more personalized one-on-one session, you can sign up for a tax strategy VIP day, and we'd love to serve you there. But yeah, check out the website. Find us on social media, everything Uba Law Group, and we more than happy to connect and just to touch base and to just really get to know you and serve your brand and encourage you to really live out this business life because it can be what you want it to be. We all get into the game for a different reason, but we have the power to grow our companies into what we envision them to be and to really serve and to provide an extreme benefit to people while we do it. So that's what I'm here for, and that's what I love to do.
So, quick question for you. If someone wanted to hire
Mhm.
your services, do they have to be a resident of Texas to do so?
Good question. Thank you so much. So we have three main services. We provide business formation, tax strategy, and as well as intellectual property and trademark services. So the only thing that requires you to be in Texas is the business formation. We're only licensed to create LLCs and businesses in Texas. But federal taxes are nationwide. So our tax strategies apply for everybody across the entire country. Trademarks also nationwide. Intellectual property, just like you probably told these people a million times, Gleesa, that's
Yes.
nationwide. You can get a trademark from anywhere. So we serve people with trademark intellectual property and the tax strategy across the country. So thank you so much. It's a very important distinction.
No problem. Well, before we leave, I wanted to give you some of the feedback from some of our watchers today. Miss
Wow.
Rhonda, this is so good.
Thank you. Thank you.
Mona saying this is thank you so much. Lakeisha,
Here for the
excellent
people.
information.
Thank you.
Rhonda again. Your passion, and I'm saying the same thing. Your passion is amazing and contagious. We know this is what you
Thank you.
do, and you love doing it, and it comes across.
Yeah.
So thank you
Thank you.
for taking a moment
Thank you
and
so much for the
sharing
invitation.
everything. No problem. Like I said, this was a no-brainer. You shared information amongst the Travel Esquire community. Hopefully, some of them will reach out to you regarding tax
Oh yeah.
strategy. I
I'm
know
here.
I am, because you opened my eyes to some things that I haven't thought of.
Yeah.
And,
I have a surprising amount of lawyers that are clients. About
yes,
50% of our
yes,
client base
we
are
know the
attorneys, and
law.
I
Don't
love it.
ask us about anything financial. No,
Indeed.
no. I tell
Indeed.
everybody all the time, I am not a mathematician. I'm an attorney. Don't ask me nothing about numbers. No, just don't. So, this will
Wonderful.
be up on the replay. If you want to share it with your clients, feel free.
Oh,
But
most
I
definitely.
really thank you for taking your time out today, coming and speak
Of
to the
course.
Travel Esquire community, imparting
Of
your
course.
knowledge, your information. It's invaluable, and thank you.
Anytime. Look
All
forward to
right.
doing this again.
All right, no problem. Enjoy your day, enjoy your
You too.
Wednesday, and hopefully
You
we
take
get you
care.
on again next year just to give us some
Oh, of course.
updates.
Of course. Of course. Y'all take care now.
All right, bye bye now.